Welcome to the ASX edition of Trade the Trend, a weekly video about where the stock market is going. This video is going to focus on the ASX 200. I'm also going to have a look at gold, copper and uranium, so make sure you stick around for that. I'm going to cover the S&P 500 in a separate video. I'll leave a link for that in the description section below. I've also got something I want to ask you at the end of this video. It's about the way I do these videos, so make sure you also stick around for that. As always, this is general commentary. It doesn't take your personal situation into account. So with all of that said, let's get into our first chart. So here we go. We've got the ASX 200 up on the screen. And yeah, look, big week in the ASX 200. We've got a breakout. We've got a breakout from this range, which has been in place since going back to April. And interesting price action today on Friday, where the market opened low, sold off, and has now rebounded through the day. So look, this breakout certainly isn't in the direction that we wanted, and this just serves as a great example of why it's often best not to preempt a breakout from a range, because ranges don't always break out in the way that either we want them to break or the way we think they will break. Some people probably would say, "Oh, look, I thought this was going to break to the downside," but you know, preempting range breakouts is, yeah, look, it's a risky play. Quite a bit of technical damage done with this breakdown, and we're now at a situation where the price action's taken out all of these previous lows over the last few months, broken support where I've got with this blue horizontal support, as well as I was saying, it's taken out all these previous lows. So we have a new lower low. I think the big question now is, will we get follow-through selling? We've had this rebound during the day, but what's going to happen over the next few days? Are we going to get follow-through selling? Are we going to get the market chop sideways for a few days and then, or maybe a week or so, and then roll over again? Or is this going to be another instance like we had in July, where the market broke down and then quickly snapped back within the range? We really need to wait and see what happens with this. But if you got stocks which are weakening, which are breaking lower, well then I think it's always important to consider, is it wise to keep holding them? Because when these markets do follow through and go lower, it can cause plenty of damage to a portfolio, which isn't exiting stocks as they fall. Now, I want to go over and have a look at the weekly chart, because this is interesting as well. Because when I step back and I look at this from a weekly perspective, what I'm looking at in here, I've still got that V shape. So the V shape is often what you get when you get a market that sells off and then quickly snaps back. And what I see in the snapback is, to me, this looks like an impulsive move. So impulsive is where the push higher is so much stronger than the pullback. So all the interest is, in this case, is going to the upside. The momentum is clearly to the upside. Higher highs, higher lows. That's an impulsive move. Then I look at what's happened since say late January. This looks corrective. It looks like it's a sideways move. So it's an interesting one to consider when you step back. It still doesn't look like this is a bearish structure, despite the price action which we've had over the last couple of days. So just coming back to that daily chart. So I wanted to look at that weekly just to give some perspective. Coming back to this daily chart, I think, you know, notwithstanding what I just said, I think we do need to respect the fact that the market now is clearly below these moving averages. The moving averages look like they're rolling over and turning lower, and momentum is to the downside. So we've got to respect that and play this defensively, and I think cautiously. And that's been, look, I think I've been saying for a while now, I've been cautious with my buying over much of this year, and that remains extra so now until we see how the market responds over the next few days. It's really a time for, I think, a lot of caution with the ASX, coming over and having a look at the small ordinaries, and it just really I think it accentuates the reason for caution, in that we've got a clear breakdown now out of this trading range, which is bounded by the blue lines. Got close about a week ago, rebounded, but now it's completely given way. And I think what I'll be looking for over the next week, like just as I was saying with the ASX 200, I want to see like how's this going to play out over the next few days. I'd be watching for price action like this area here in August, September, where we had a market that fell, but then just sort of went sideways, trod sideways below the moving averages, and then that set the stage for another move lower. So that would be the concern here. If we see price action that trying to get my market to move with me. Yeah, if we see price action like this, that's concerning, because then that opens the window for price action like that. That's not what we want. Hopefully, that's not the price action that starts to take shape over the next few days. Hopefully, it's not this sideways movement, which often sets the stage for lower levels as the moving averages come down. But that's what I'm on the lookout for over the next few days. And that would be your classic dead cat type bounce, where the market doesn't do much and then it rolls over again. But look, I think that whilst this support of 2,600 is holding, I think whilst that holds, there is still the potential for this being a large basing pattern that potential still hasn't gone. We do still remain within this broader range, despite breaking out of this smaller range. But look, I think be very careful about the stocks that you hold that are trending lower. It's a case, I think, that if something is weakening in this sort of environment, I think it's wise to consider, should I continue to maintain a holding that, or am I better off just cutting the position, cutting the loss, and protecting capital? Because protecting capital during these bearish phases is just so important, because we want to make sure that we're in the game still when the market does invariably and inevitably turn up at some point in the future. Now, if you're getting some value from this, please hit that like button. Please leave a short comment. Just, hey, thanks for the video. It just tells YouTube you're watching and engaging, and YouTube will show other people. And hit that like button and the subscribe button if you haven't already done so. And also come over and visit me at Motion Trader and sort of see the work I'm doing there with exiting stocks which are falling, as well as identifying the stocks which are showing upward momentum. Now, let's move on, have a look at some commodities. So start with gold. And gold continues, look, it's the same story as last week. Gold continues to coil within this narrowing range. And what's been, I think, impressive about gold over the last week is that it's been holding its ground despite strength in the US dollar. Often we see when the dollar strengthens, gold gives ground, but it's really been holding its own, which is encouraging, and probably also for me a little bit surprising, given that it is in a corrective phase, that it's being able to not give up that ground. Gold stocks, though, are very much a mixed bag. Some look quite ordinary, some look quite reasonable. It's mixed. It really is mixed. So I just don't have a clear outlook on where we're going with gold. I like it when everything's in sync and the stocks are shaping up well and the metal's shaping up. Maybe it's a sign that this consolidation does have longer to play out, and it is going to become more complex, and the time for a big break above 2,800, who knows? It could be further away than we might like it to be, but I don't know. It's just a case of just watch this as the price action develops, but not in a hurry to do a great deal just at the moment. Copper's been an interesting mover through the week in that it has given ground. It has fallen away while gold has held its ground. So it's back down now towards its August low. I like the overall copper picture when you look at it on a larger time frame, that it's the big move up followed by the lengthy consolidation / correction. But until the price action can start getting itself above the moving averages start turning higher, and probably also getting above this resistance band at around 4, it just doesn't shape up as something which looks like there needs to be a hurry to get involved with. And that goes the same with the copper stocks, which spoke about last week, saying I really like this from that medium term perspective. Big trading range, but just looking at it this week, the copper stocks have given ground with the copper price, and we've got this like when you look at the price action, you can see like the strong move down, the sharp move down from the July high, and then you can see that sideways congestion, consolidation, which is now giving way to possibly a move down to retest the lower end of the range. That's the sort of price action which doesn't really fill me with enthusiasm to jump in and do a great deal. Going to wait till we get this price back above those moving averages. Quick look at oil. We spoke about this a couple of weeks ago. Got the breakout above $83, and it's continued to run. Moving average continues to move higher. It's one of the stronger commodities, and and this is possibly also a reason that maybe we get some more volatility in stocks over the coming weeks with this higher oil price. But higher oil prices are never really great for an economy because it tends to slow things down. So it's good maybe for oil stocks, maybe not good for the stock market. And just finally jumping over and having a look at uranium. And look, it just remains super strong. It's the standout in the commodity sector. As I keep saying, though, we are stretched above these moving averages. I do think a pullback is coming. I don't know when and I don't know from where, but pullbacks always come back towards averages. I'm still holding my uranium holdings. I've got no intention of taking any profits, even though I do think the potential for a pullback is really increasing. I'm focused on the medium-term trend. I'm looking at, I go across and I look at things like the weekly chart, and I compress that up and I think, look, where could uranium go over the next 1 to 2 years? And I think well up north of here is within the realms of possibility. So for me, uranium is a strong hold, and any pullback, then I'd be looking for those asymmetric entry points to possibly top up some holdings. So look, let's leave that there for this week. And the thing I wanted to ask you was, I'm thinking of doing these videos live on a Friday afternoon, say at around 1:30. Would that interest you? Would it interest you to tune into a live telecast of what you're watching now on Saturday? I think the advantage of live is that you'd be able to ask questions in real time. Ask me about a stock you're looking at. Ask me about an opinion on, what are the chart formations on something which I'm not talking about. And maybe you can go a little bit longer. Maybe you can cover a bit more ground. Just a thought. Tell me if you're interested. Tell me whether Friday 12:30ish would work. And if you can't, there's always a replay to watch at the regular time on Saturday or Sunday or whenever you happen to watch these. So anyway, enough of that. Thanks for joining me. I look forward to coming back and talking to you next week. Till then, bye for now.